Hello and welcome to this Telecoms.com webinar produced in association with Openet. I'm Mike Hibbard, Editorial Director here at Telecoms.com, and today we'll be looking at an issue that has embedded itself at the very heart of the industry, the relationship between operators and over-the-top service providers. Openet recently conducted a research project in conjunction with STL Partners that sought to assess the opportunities and threats that lie in the path of mobile operators as they look to maintain relevance in service provision and avoid being relegated to the dumb transport league. It was, the two firms tell us, the first research project to have sought out the perspectives of both the OTT players and the telcos, with 40 companies, including Google, Orange, American Express and Turkcell, among those polled. Now, more often than not when these two groups of companies are portrayed, the focus is on the competitive tensions between them. But the key message from this research, according to STL and Openet, is that there is actually a degree of consensus in the two groups' outlooks, and that the opportunities for collaboration to the benefit of all parties are significant. To take us through some of the findings of this research, I'm delighted to have with me today Michael Manzo, who's Openet's Chief Marketing Officer, and Chris Barraclough, Managing Director and Chief Strategist at STL Partners. I'll shortly be handing over to Michael so that we can get stuck into some of the detail, but before I do, just a quick bit of housekeeping. After the presentations, Michael and Chris will remain online to answer your questions. If you have a question to put to them, please type it into the dialog box underneath the main webinar window at any time. Michael and Chris's answers will appear as text in the comments stream when the presentations are finished. For now though, Michael, the floor's yours.
Thanks, Mike. Openet is a developer of service optimization software. I thought it might make sense to give a little bit of background about Openet as to why we're presenting on this particular webinar with our partner STL. Openet's service optimization software enables operators to develop new business models to monetize data services specifically. The service optimization software includes policy control capabilities to do things like governing speed, the quality of service, or even governing the ability to use certain types of applications, as well as charging control capabilities to monetize traffic and centralize things like user entitlements. As you can see from this slide, our customers include numerous Tier 1 operators around the world, both fixed line and wireline operators. And as a result of our area of expertise, it seems that there are new business models operators could pursue, such as partnering with over-the-top content and application providers that would generate new revenue streams for the businesses, and that Openet software capabilities will be able to help them with those new initiatives. Thus, we took on this research project with STL Partners in concert with the Telco 2.0 initiative to try to understand what those business models could be and how both sides of the table, the operators as well as the over-the-top content providers, feel about those business models and which ones might work in particular. From my seat, operator legacy business models have a limited runway. Looking at data from Infinetics that they've published as part of their research service, in 2011, operators' global revenue grew 6%. By 2015, that'll reduce to 3%. Voice services revenue is on the decline already. By 2015, that revenue stream should have declined by 10%. Messaging is flatlining because of a number of reasons, including commoditization of the services, as well as over-the-top replacement services, such as Apple's iMessage and similar services from Skype and other third parties. Data services offers growth potential, but unfortunately, profitability for those services is eroding. From the left side of this chart, you can see that TELab published research in 2011 that said that operator mobile data services will reach an end to profitability by 2015 in every market in the world. So while the revenue growth may be there for data services and that may offer some continued growth for the operators for their core consumer and enterprise services, profitability for that service is declining, and thus operators are in a situation where they perhaps need a new market segment and new business models to address those challenges. Disintermediation is no longer a prediction. As I discussed in the previous slide, revenue streams from voice and messaging services are eroding. In 2011, 7% of total messaging services were to the top. It's a $177 billion revenue stream in total, and $13.9 billion of it was carved out to other services from third parties. Voice is on a similar trend, and data is considered to be the savior. But will it really be? Here's a quote from AT&T's CMO where he's saying it's not just a pipe, That's nonsense. We offer more value than that. But is he talking about the actual value provided today, or is he talking about the potential value provided? The reality is those services are commoditizing too. In the telecom industry, it's a bit of a cliche to hear people talking about their fear of becoming utility. It's a common thing you hear people talk about. It's as common as hearing people talk about the fear of becoming a dumb pipe. I would argue that it's already happened, though, that operators already resemble utilities from a shareholder value perspective. If you look at the dividend yield rates by sector from the S&P 500 over the last 5 quarters, you'll see from the right side of this slide that telecom services and utilities are essentially identical. They're both between 5 and 6% in their dividend yield rates. And then if you look at the 5-year share price change by sector, you'll also see that utilities and telecom services are in negative numbers. These telecom operators are no longer growth stocks. They are returning dividends to their shareholders because the reality is their revenue isn't growing and thus the share prices aren't growing. Looking at one operator in particular to get a better view of this slide provides AT&T's dividend per share return from 2005 to 2012, where you can clearly see that that number is on the rise. If you look back even farther, back to the 1980s, you'll see that the dividend per share price return has risen from 10 cents up to 44 cents per share. Operators are moving from growth stocks, where they had increasing share prices and reinvesting their profits to grow their businesses, to income stocks, flat share prices, and returning a percentage of profits to their shareholders. The reality is that operators are not just needing a business model, they need a new market segment to drive growth into their businesses. Cloud and machine-to-machine are candidates, and many operators are pursuing them already. But what about their pace and ability to innovate? It seems like every discussion I have, even those with the operators, include talk about how slow operators are in innovating. Interestingly enough, the individuals that I meet are themselves innovative and entrepreneurial, but yet the culture of the operator seems to stifle that spirit, something Chris will come back to in the research findings shortly. I would contend that operators are suffering from self-inflicted wounds. I'm borrowing from Jeffrey Moore's concept about return on innovation in this slide in his book, Dealing with Darwin. In that book, he talks about how innovation dollars are spent accomplishing one of 3 things: differentiating your services and creating meaningful differentiation and value for your customers, and therefore pricing power; neutralizing your competitors, essentially keeping up with the Joneses; or simply increasing productivity by reducing your costs and therefore increasing your profit margins. Rather than focusing on innovation investments to truly differentiate their services, I would contend that operators have spent their dollars neutralizing competitors or increasing profitability. To neutralize competitors, they focus on building out their network coverage and quality. To increase their profitability, they tune their procurement processes and increase their internal process efficiencies. The lack of focus on creating differentiated services has resulted in commoditization. The chart on the right of this slide shows global ARPU for developed markets, which has been consistently reducing over the past 5 years. Thus, prices are eroding, which is in part responsible for the low revenue growth that we see globally in the operator community, despite some of the emerging markets that continue to grow significantly. As a result of all the data that I've shown you, it's very clear that operators require not just a new business model, but a new market segment to drive growth into their businesses. It really is a simple question for the operators. Are you interested in growing, or are you satisfied with utility status? There would be nothing wrong with the status quo. Their businesses are continuing to grow modestly. They're returning profits to their investors. Shareholder value exists. It's a satisfactory role in the value chain. But when we talk to individuals at operators and we hear speeches from CEOs at forums such as Mobile World Congress, it doesn't seem that they're satisfied with that. We continue to hear operators talking about new business models such as cloud computing and machine-to-machine. It seems that they want to be innovative. It seems that they want to grow at a higher rate than they are. The question becomes, how will they? When will they? And that's the topic of the research that Chris will talk about shortly. One potential market segment is partnerships with over-the-top content and application providers. I would contend that this is an area that could create differentiation that is sustainable, where those innovation dollars that are spent are not spent neutralizing competitors or increasing profitability, creating pricing power. And the reason for that is, in many cases, these business models would require a joint venture. Operators in any given geography would be cooperating with one another. We've seen numerous examples of this around the world today for things such as mobile banking. And in fact, in addition to mobile banking, we see it for things like mobile advertising. If the operators are to focus on this new market segment, they could create a set of value-added services offered to over-the-top content and application providers on a revenue share basis or directly for a fee, such as a wholesale business model. These new business models accomplish three things for the operator. They counteract disintermediation. You create additional value in the value chain such that the source that is differentiating you, the over-the-top content and application providers, are now partner threat. Two, you create a new revenue stream, and presumably you create one with pricing power. If you offer this as a joint venture, you will have no competition driving prices down. Thus, you can sustain your pricing levels. And last but not least, theoretically, you would increase your data service profitability because you'd be creating a new revenue stream for those data services. Thus, for a number of strategic reasons, these types of partnerships seem to make a great deal of sense. The question becomes, when will the operators pursue them? Operators have a number of assets today that could enable these business models. These include their subscribers. They have profile data about their subscribers. They have capabilities to understand who those subscribers are and how they're using services, meaning business intelligence. Increasingly, we see vendors offering operators capability for predictive analytics, so they can predict the behavior of consumers or their use of services in the future based on their historical use of services. Operators also have their networks. Those are tremendous assets. They have the ability to bundle connectivity with services. We see this today with the Kindle. That's perhaps the best example of it. But obviously, these capabilities of bundled connectivity and premium quality of service to make sure that over-the-top services perform are capabilities that could be bundled directly with the contents and applications as opposed to sold separately to the consumers. Operators have service controls. They have the ability to authenticate and authorize access to different applications and services, which they could offer on behalf of third-party providers if they chose to. And operators, if they have nothing else, have billing capabilities. They have the ability to monetize services. They have the ability to do that on a transactional basis, meaning purchasing a specific product or service on a one-time basis. And they have the ability to charge on a recurring basis for services. We see a host of subscription billing companies such as Zuora popping up to enable subscription billing services or cloud billing services for third parties. This is an area that the operator is perhaps most logically equipped to fulfill because they've been in the business of offering monetization capabilities for decades, whereas today there's a new market segment and a new set of competitors cropping up to provide similar capabilities. Operators are the most logically equipped to provide this. If they take these assets and they put them together as a set of solutions, they end up with a robust set of solutions that could be offered on perhaps a wholesale basis or some type of revenue share basis to the over-the-top community that creates a new market segment and enables business model innovation and ultimately results in revenue growth, which then would result in share price increases. Openet service optimization software is uniquely equipped to enable those types of capabilities I just discussed. Sitting within an operator's network, an operator can use service optimization software to take the assets they have and reveal and expose them to the over-the-top community, thus enabling the over-the-top community to bundle those capabilities with their own content and services and then offer them to consumers and enterprises directly. For operators, this creates not just a new business model, but an entirely new revenue segment that's high growth and therefore can reinvigorate their stock growth and create additional shareholder value. Thank you. I'm now going to turn it over to Chris, who's going to walk through the research that we recently conducted talking to the over-the-top content providers as well as the operators about the business models that would work.
Thanks for that, Mike. So let me take you through the headlines of the research that we did over the last couple of months. What I would say, however, is that there is much more detail on this in a white paper that we're going to publish shortly. And if you'd like to get a copy of that white paper, then please do email Mike or myself. My email details are there on screen. and we can send you a copy when that comes out, which will be very shortly. In terms of who we interviewed for the research, we focused on upstream customers in media, advertising, financial services, and a couple of retail companies as well, and focusing particularly on large companies, so the big head rather than the long tail, and interviewed those who are responsible typically for product marketing or digital channels, so who are familiar with distributing their products and services via a kind of digital media. And then on the operator side, we interviewed 16 operators, largely tier 1, some tier 2s, across the Middle East and North Africa, Asia, Europe, and the US. And clearly one of the things we were exploring was differences in perspective and opinion on the potential role of operators in supporting third-party companies in delivering solutions and services to their customers. Now, it was largely a qualitative interview that we undertook with these parties, but we did do a quantitative study as well. And one of the things we asked was, what did the interviewees think were the degree of opportunity, how interesting or important were specific telco enabling solutions along the areas of customer profiling, supporting third parties with marketing offers, potentially helping third companies manage entitlements, both the identity and the authentication of their customers for their services, the delivery of some kind of guarantee around network quality of service, the whole area of billing and payments and collections. So to what extent can operators support third-party companies in billing their customers and collecting money, around zero-rated data. So rather than the end user being directly charged or having the consumption of data charged against their bundle, that would be zero-rated and operate outside the bundle package. And then we also spoke a little bit about customer care and asked them about how important they thought telcos potentially taking on some kind of outsourced customer care element on their behalf would be. And I think what was interesting was, if we look at the averages for the upstream customers, particularly in 5 areas, there is a reasonable level of interest in telco enabling services, particularly around support around customer profiling, marketing, identity authentication, network QoS, and billing and payments. So there is not a perspective of all these areas and issues and business processes can be solved at the edge. There is still very much a perception that the network and the telcos with their assets can add value to these business processes. And that tied in pretty closely with the average view from the operators themselves. Very similar level, perhaps some slight differences around billing and payment, which is something of a hot area at the moment, as for those who attended Mobile World Congress will know. A little bit like mobile advertising perhaps 3 or 4 years ago. And the other area where operators are a little bit more enthusiastic around zero-rated data. Now, having said that, the upstream customers, those who were interested, tended to be very interested in zero-rated data, and they were particularly rich media companies, whereas it was of less interest to perhaps some of the retailers or financial services institutions. The other thing we asked from a quantitative perspective was where the different players saw potential barriers to actually executing and implementing these telco solutions for third parties. We asked them around telco interest or lack of interest in this, lack of interest from upstream customers, operational, organizational limitations in terms of implementation, technical issues, lack of standards or cross-industry solutions, around regulatory or legal constraints, and the cost of IT and the actual integration process itself. And looking at the averages again for the upstream customers, there was nothing that really stood out apart from the perception that telcos themselves were struggling with operational, organizational sort of limitations in terms of executing. And there was clearly some frustration around the speed with which operators implement and the consistency with which they're implementing, both across the industry, differences between operators, but also individual operators themselves, the perception that things change on a day-to-day or week-to-week basis and they don't get a clear answer and a clear process from operators in terms of building these solutions. And what was interesting is that telcos themselves, and we spoke to relatively senior managers within these organizations, guys who are responsible for building new business models, Telco 2.0 solutions, themselves felt that their organizations were the key limiting factor. They did feel that that standards and a lack of cross-operator solution was a bigger barrier than the upstream players, and particularly they felt that the regulator or legal constraints was an issue in certain areas, such as network quas with the net neutrality issues, and around delivering sort of personal data solutions for marketing. Now, I don't want to go through all the detail behind the questions and answers we asked, but I think this one is worth showing. Now, I've taken away the individual names of the upstream customers who answered along the bottom, so this has been anonymized, and that was one of the agreements we made with them, that we wouldn't reveal their individual answers. But I have shown the different industries from which they came, so a couple of advertising companies, IT in green, then a large number of media players, financial services and retail. And this was a question we asked them about how interested they felt telcos themselves were in building these kind of Telco 2.0 solutions and enabling services. And what was interesting is that a fairly large number felt that telcos themselves were not sufficiently interested in these services. And the reason for that, they communicated, was they have not had clearly communicated to them from the operator community what their value proposition is. They don't fully understand what telcos could do, what telcos are offering them. Now, that was actually quite interesting, because when we asked the same question of operators, they were really, to an operator, very clear that these Telco 2 enabling services, serving third-party companies, was an absolute strategic priority for them. So there's a very clear difference between the perception from operators and what is currently being perceived by those potential future customers. And really, operators haven't yet communicated the value proposition to them. So what we were able to do by plotting the responses from these two areas of questions, the horizontal around on the axis here around the overall value of Telco 2 solutions as perceived by the upstream customer segments, and on the vertical axis the perceived barriers to realizing those Telco 2 solutions, is determined for different upstream customer segments. And the first of those are those companies, and they represent about 46% of the respondents, who believe that telcos are in a very strong position to provide major business process solutions to them. They believe that the overall value of Telco 2 solutions are high, and also the barriers to realizing them are relatively low. And that's obviously a very large proportion of the respondents. A much smaller group had a perspective, probably less than 10% of our sample, felt that although Telco 2 solutions are potentially of very high value to them, the barriers to realizing them are much higher. So telcos are struggling to sort of get their act together. Again, a relatively small group fell into the segment that suggested that telcos can provide a small part of the answer, a small part of a business process or solution, perhaps a voice API or a location API that would be integrated into something much bigger that would solve a problem for them. And then around a third, again, rather a large proportion, fell into the group that felt that overall telco solutions were of limited value. And what's interesting is if we look at each of those customer segments, there are different approaches that operators require to serve them and convince them that Telco 2.0 solutions are valuable to them. The first two areas really cover a relatively small proportion of the overall customer base, according to our sample. The first is around developing channels. Those customers that believe that Telco 2 solutions need to be integrated into much bigger solution areas. Really, operators need to develop channels working with aggregators and value-added resellers, systems integrators, ISVs, to integrate the Telco 2 sort of raw materials into those bigger solutions. And the other area, which are the kind of skeptics who believe that telcos could do more but are incapable of currently delivering, the barriers are too big, really operators should focus on specific proofs of concept to demonstrate the overall capability and viability of operators' implementation. But probably the biggest bang for the buck in terms of approaches to developing and delivering Telco 2 would come in focusing on those skeptics who don't really buy into the Telco 2.0 solution, those future customers who kind of say it's low value and also the barriers are high. And that's really around marketing communications approach, educating them on the value of Telco 2 assets. But probably the biggest area where operators really are now or should be focusing is on those customers who believe it's possible and are ready and willing to adopt Telco 2 solutions if they're made available to them. And that's about building complete commercial solutions, either at an individual operator level or a collective approach to solutions around such things as identity and authentication for third-party goods and services. If we look at the same responses and the same piece of analysis for the operator community we interviewed, we get quite a different picture. Most of them feel that telco solutions for third parties are valuable. They fall to the right of that vertical line, the right-hand side of the chart. But their issue is that it is difficult. The perception is it is pretty difficult for them to actually implement. So we have a relatively small number who believe that they can do sort of a Telco 2.0 light, or they can perhaps do an API program, expose some assets via APIs. Nobody felt that Telco 2.0 is a waste of time. Nobody fell into that camp of saying it's low value and too difficult to do. There were, about a third who felt, this is relatively easy to, particularly one of the Asia Pacific operators up there who feel it's pretty easy to do and of high value. And there are some other US operators that fall into that camp. But probably 2/3 are in that perception that, there's gold there, but it's just out of reach. It's really quite difficult to realize. Which begs the question, why are telecoms operators finding it so difficult to generate value for third parties? Why is the perception that it's taking a long time to come through? And we really came up with two reasons through the interviews we undertook. The first reason is about investment timing. Operators feel it's very difficult to get the investment timing right for new business models. If they invest too early, they potentially waste a lot of money, and they also potentially cannibalize their existing business model. If they launch a VoIP solution, they cannibalize potentially their existing voice and messaging revenues. And mobile advertising was one example that was cited of this, where operators felt they got in too early before smartphone penetration had really taken off, and therefore the proposition to consumers was not strong enough. However, they also said that if we invest too late in new business models, we potentially find that our core voice and messaging revenues have, to some extent, reduced in value. We are already paying relatively large dividends back to investors. Therefore, we don't have the cash available to invest in these new business models. And perhaps more importantly, we've also been locked out by other competitors who have moved more quickly than us. And Apple and Google were cited as examples of this. So operators feel that if they invest too early, they have a problem. If they invest too late, they have a problem. And to some extent, that leaves them as sort of rabbits in the headlight. They know there's a problem coming, but they're not quite sure which way to go. Do they go left or they go right? So they prevaricate around these new opportunities and don't really invest in a meaningful way. The second issue around delivering Telco 2 solutions is much more around execution. And what came out is a sense that they're in a bit of a prisoner's dilemma. Those who are familiar with the prisoner's dilemma, the view that two or more parties may not collaborate, even though it gives the best overall result for them to do so. And in this example, if they both remain silent, the two prisoners, they each get a year in jail, so there's a combined total of 2 years in jail. Or if they both confess, they get 5 years in jail. But the worst result collectively is if one of them keeps quiet and one of them effectively chooses, rather than to collaborate, to compete and confess and grass up his mate. The one who confesses gets off scot-free, and the one who keeps silent gets 20 years in jail. So there is always the temptation to compete against your fellow prisoner or operator rather than collaborate with them. And from the operator's perspective, this prisoner's dilemma really operates on two dimensions when it comes to working with third parties. First of all, operators have a choice as to whether they collaborate or compete amongst themselves with other operators. And they also have a choice as to whether they collaborate or compete with those third parties, including the OTT, over-the-top players. And what we've seen in our discussions are there really are sort of 6 strategies that are starting to develop that really illustrate this prisoner's dilemma. The first is we start to see in some instances what we call defense of the realms. Operators are collaborating together to really try and head off the competition from the over-the-top players, particularly in voice and messaging. So RCSE, an example, where the European operators, for example, are working together to try and prevent the likes of WhatsApp and Viber and iMessenger from really taking hold in the marketplace. But always there is a temptation for operators to seek to differentiate against each other and develop their own solution. We call it steal the crown. They have an opportunity to develop a position where they capture a greater proportion of the value available rather than sharing it amongst themselves. And one example of this is operators seeking to launch their own voice over IP service that competes with the likes of WhatsApp, but also with the kind of RCSE solution that is more common to them. As we move further up, we see instances where operators choose to collaborate with specific over-the-top players. And one example of that is happening in the US, where Verizon and AT&T are collaborating with some of the financial institutions in a venture called ISIS, where they're starting to carve out a role for themselves in a payment solution. But again, many of these operators are also choosing to compete with their own payment solution that operates outside ISIS. So they're kind of keeping one foot in the collaborative camp and one foot in the competition, sort of going it alone differentiation camp. And again, moving sort of further up the stack, there are opportunities for what we call a republicanism approach, where rather than trying to act as a kingmaker and select specific OTT players or third parties to be successful, operators collaborate collectively and create an open access where the market determines which of these third party solutions will be successful. And there's been one or two examples of that, the wholesale application communities, one example of operators trying to collaborate to create more of an open access environment. But again, in most instances, operators are also choosing to compete with their own API programs that operate outside WAC and one API, and they have a suite of APIs they're making available to developers. So there are these 6 strategies that we're starting to see, and most operators are playing something of a portfolio game, doing a number of these. However, I think what is particularly interesting is that if we look at how to create value overall for the telecoms industry, it seems pretty clear that although it is individually rational for each individual operator to try and compete against the third parties and compete against other operators, because they are seeking to carve out and generate the most value for their individual company, at a collective level, it's entirely irrational, because what it's leading to is a great deal of fragmentation amongst the operator solutions. So the third parties aren't sure who to work with and how to work, and it's expensive to work with multiple operators. But also they're finding that operators are competing with them in terms of payment solutions, in terms of identity and authentication solutions, and so on, in terms of marketing solutions, rather than collaborating with them. And that leads them to actually develop solutions that are independent of the operator. And actually, location is one example, and we've seen it with adaptive bit rate with network QoS, where the third parties have waited for a guaranteed quality of service for delivering video, and that's been slow coming, so they've actually adopted their own sort of edge solution with adaptive bit rate. So although individually it's rational what operators are doing, collectively it's, if not suicide, it is certainly value destroying. Ironically, the big concern with operators is if they collaborate, they commoditize their solution, they cannot differentiate. However, it seems pretty clear that by working together, they develop scale solutions and that they generate more value overall, not only for those third parties and the consumer, but also the telecoms industry itself. So ironically, it seems that by trying to differentiate and seek more value at an individual company level, they're actually destroying value rather than working together in a more collaborative way. And we would also argue that rather than building a commodity by collaborating, there's actually still an opportunity for operators to differentiate. I point out that most operators are adopting a portfolio approach. They're doing many different strategies here. They're adopting probably at least 4 or 5 of these different strategies according to the nature of the Telco 2 solution. What we did try and determine is the kind of locus or center of each operator's strategy. And again, I haven't put the individual operators on here, but I have put their region. And what we can see is if you look at the Middle Eastern operators down there in purple, they are seeking to collaborate really to build a defensive barrier against the over-the-top players. So they're in the sort of defense of the realm focus. In the Asia-Pacific, the operators in green, again, it's a very disparate market, Asia. But the operators we spoke to are very much pursuing a go-it-alone strategy, and they're seeking to develop content solutions, advertising solutions on their own for their own base, and looking to differentiate against other operators and against the OTT players. In the US, there's more of a move towards collaborating with specific over-the-top players to try and develop solutions. And largely, although I think ISIS clearly is an example of collaboration amongst operators, generally the larger operators, AT&T and Verizon, are seeking to kind of go it alone. And that probably contrasts a little bit more to Europe, where there is more of perception that their value will come through collaboration. And we've seen a lot of collaborative efforts with the Euro 5, the big 5 operators around NFC. We've got Fortis Verga, another sort of payment solution in Sweden. We've got Oscar, the proposed joint venture in the UK between Vodafone, O2 and Everything Everywhere, which is a marketing and a payment solution. So they're moving more to a collaborative approach. So just to summarize the conclusions here, we think that the research demonstrates there is clear opportunities for operators to support third-party business processes, particularly in areas of profiling, marketing offers, identity authentication, network quas, and in the whole area of billing, payments, and collection. One of the issues is that it's not clearly communicated what the value proposition is, and the perception from third parties is that implementation is slow and bitty. We think that nevertheless there are a number of third parties who are enthusiastic and remain enthusiastic around Telco 2, but with different customer segments there is a need for different go-to-market approaches for operators. What's also clear is the perception is there are no material barriers except, and both operators and upstream customers agree on this, except the operators themselves' ability to implement. And what's really driving that issue around implementation is operators finding it difficult to determine exactly when they should be investing in these things and how they should go about implementation. Should they work together or should they seek to differentiate? So what are the implications and recommendations for operators in the telecoms industry as a result of this research? I think the first thing is that given the importance of building scale solutions, it is particularly important for operators to collaborate, and we need CEO level commitment to country and regional collaboration so that the telecoms industry can provide enabling solutions that are valuable to consumers, valuable to third-party companies, and above all, valuable to the telecoms industry itself. And we need to start seeing CEOs lobbying the regulators in their region to get the right to work together on these solutions. The second thing is we believe that it is fairly clear that simply investing in faster and fatter networks through 4G, LTE investment is not enough. Operators need to seek to monetize their investment above and beyond simply data carriage. They can add more value to the users of their networks by developing third-party enablement platforms that contain the Telco 2 or enable the Telco 2.0 solutions we've talked about around things like profiling, advertising, identity authentication, network cores, and so on. And some of that investment in network speed should be reallocated more into network intelligence. The third area is many operators sort of coming together around the perception that Google and like are the common enemy. I think this is too simplistic. What the research seemed to show is that a more open approach to working with third parties, including those disruptor companies like Apple and Google and Facebook, builds more value. Now, that's not to say operators aren't going to compete and compete hard in certain areas, particularly around voice and messaging, but overall they need to seek a partnership approach to grow the overall pie. And I think the fourth area is that for too long we've talked as an industry about exposing assets, about taking a bit of raw material, location or voice and messaging, or whatever it is, and exposing it as an API. What came through very clearly from these large companies is they don't want assets exposed to them, they want solutions. They want complete solutions that solve a business problem. And I think the telecoms industry needs to focus on those business problems, work together with those upstream customers, and then work back to determine what capabilities are required and how they should be brought to market. At the moment, we've done more of a push approach to our customers rather than more of a pull approach, really understanding what they need. So that's all I've got time for. Thank you very much. Clearly, as I said, there was more information on this in a white paper, and if you want to pre-order that, then please do get in touch with me by the email there. Otherwise, now I think it's time to hand back to Mike. Thanks very much.
Well, thanks very much, Chris and Michael, for sharing with us the findings of your research. Now, as I mentioned earlier, both speakers will remain online for some Q&A with the audience. If you have a question you'd like to put to Michael or to Chris, please type it into the comments box on this page. The response will appear as text in the comment stream, and there is no audio element to the Q&A session. So I look forward to some stimulating discussion now, and all that remains is to thank Chris, Michael and Openet for their involvement in today's Telecoms.com webinar, and to thank everyone who joined us for the presentation. I hope you all have a very good day.